they come in.
Yes. All right. Good afternoon, everyone. We might make a start. I know everyone's time's precious. Welcome to this session today on the ATO debt recovery process and what we're seeing in the marketplace. So my name is Andrew Schwarz. I'm the principal here at AS Advisory. AS Advisory specialises in corporate recovery, forensic accounting and business advisory. I've got over 30 years experience in assisting business owners in distress and when they're in need of expert independent advice. Today I'm going to cover off what's the state of the nation at the moment with regards to tax debt, what your lodgement obligations are, what happens with the ATO when it's in recovery mode, what your options are available when they come knocking, and any questions. We'll have time for questions at the end, but if you've got any questions, feel free to put them in the chat. Billy's monitoring the chat for us today. Alrighty, state of the nation. Since the ATO took some relief measures during COVID and didn't really chase debt that aggressively over that period, the debt has almost doubled from 26.5 billion to 52.8 billion as at the middle of last year. So as I said, the ATO has been lenient, but recently has moved into a more firmer approach, and we're seeing the ATO aggressively now trying to rein this debt in and chase debt. And we're seeing that in the insolvency figures with nearly 15,000 insolvencies in FY25, which is a 33% increase on last year. Mostly seeing that in construction, hospitality industry, making up over half of those appointments. And we're currently seeing a bit of stress in the hospitality, healthcare, education, retail and transport sectors, mainly tightening of consumer spending and margin squeeze. All right, as I said, currently there's around about $80 billion in what the ATO describes as collectible debt. So that's debt that they think they can collect. It's debt that's not subject to disputes. And around 52.8% of that relates to business and 32.5 or 65% relates to small business. The enforcement climate has significantly increased. The ATO started increasing their enforcement activity in March 22, where they issued approximately 30,000 letters to businesses and 52,000 letters to directors, warning them of their tax obligations and noting that that there was now time to start post-COVID, and it was now time to start dealing with the tax debt. The ATO has implemented AI-driven targeting, and a lot of debt recovery is now being automated rather than a person, and that's saving around 400 staff hours in the ATO. And they're particularly targeting single-touch payroll, cross-matching data with financial institutions, and superannuation lodgement obligations. They're targeting the top 1% of high-risk debtors, which makes up about 20% of the debt. And they're focusing at the moment on construction, hospitality and transport. But having said that, in the last few months, we are seeing them taking action against anyone who has a poor compliance history or alternatively has debt outstanding for more than 90 days. In their report they recently released, their number one priority is debt collection and payment compliance, faster, tougher and automated. So the ATO is definitely into recovery mode at the moment. Their other priorities were fraud and system integrity, once again using AI detection to prevent fraud. Payday super, which is proposed to come in July next year, where you have to pay superannuation at the same time as you pay wages. Digitisation of small business, trying to simplify some of the reporting, and future-proofing capabilities with regards to technology in their workforce. So they're their current key priorities for FY 2025 or FY 2026, I should say, in their 25 plan. As I mentioned, firmer action has really taken off. So gone from a period of where you wouldn't have seen too many of these recovery methods to now seeing a massive rise. So In 2024, we had 36,000 disclosures to credit reporting agencies. So if your debt's over $100,000 and outstanding for more than 90 days, the ATO will report that to credit authorities. So that can impact your borrowing capacity. We haven't got the figures, latest figures for that yet. They'll come out in their annual report. Garnishee notices, you can see they've risen from around 6,000 to over 10,000 as of March this year, which if you annualise, that's around about 140% increase. Director penalty notices have gone from about 27,000 up to 59,000. That's around 230% increase. And wind-up applications, 2,500 to 2,200 as in 8 months of this year, as of March. So if you annualise that, it's about a 35% increase. So seeing the ATO using their debt recovery measures and really putting taxpayers who are behind under a bit of pressure currently in the market. So what are your tax obligations? Obviously, you've got to lodge a business activity statement. That's normally due either 28 days after the end of the quarter if you're on quarterly payment cycle or lodgement cycle, or 28 days after month end if you're on a monthly cycle. PAYG is generally reported at the same time, either through the BAS or IAS. Superannuation, you're 28 days after the end of the quarter. Or if you don't lodge by then you have to lodge an SGC statement, and that's due 1 month after the end of the 28-day period. Income tax returns, normally 31st of October, sometimes later if you've got a tax agent, and FBT returns in May. So what happens if you don't lodge? Well, if you don't lodge, the ATO can impose a penalty of $313 for every 28 days, up to a maximum of $1,500. They start accruing general interest charges from day one, and that's accumulative. And also as of 1st of August, general interest charges are no longer deductible. It flags within the ATO, and it gives you a reduced chance of going into a payment plan if you are late, and may result in fast-tracked enforcement. As I said, garnishee notices, director penalty notices, or even wind-up applications. How do you get onto the ATO's radar? Well, one, failing to lodge on time. Secondly, if you have a history of late lodgement and no non-payment, you have debt that's outstanding and not in a payment arrangement, you have tax debts associated with incorrect reporting, incidents of defaulting on payment arrangements, or you've failed to communicate with the ATO after receiving some sort of firmer action communication. So key one there is payment arrangements. If you get into a payment arrangement, then the ATO's recovery activity ceases, as long as you continue to meet those obligations. All right, how does the ATO recovery work? So in the old days, and we're seeing less of this now, you used to get a reminder notice or a phone call advising that you were late. That's what they used to call the old orange notices. And then you'd get a final notice, which would be red, noting that they were about to move to firmer action. In recent times, we're not necessarily seeing those notices being issued, and we're more seeing the ATO moving directly into some sort of firmer action. So as I mentioned before, if you've got debt over 100 grand and outstanding for more than 90 days, the ATO will report that to credit reporting agencies. Therefore, it can impact your credit rating and borrowing capacity. You may also have concerns from trade suppliers who are monitoring the credit reporting systems. They can issue a garnishee notice to your bank or your debtors. So that's basically a notice directing that those people who owe you money, or your money that's in your bank, to direct that to the ATO. And sometimes they'll do that without notice. So you'll just all of a sudden see money disappear out of your bank account to the ATO. They can issue a director penalty notice, which effectively transfers the company debt to you personally if you don't take action within certain periods, and I'll cover off on a bit more detail around those a little later. They refer you to external collecting houses, or they can issue a statutory demand and proceed to wind up your company. Might have a little bit of an interactive poll now. I'm just interested to know if those on the call today, have any of you experienced any of these things? So do any of you have clients that currently have more than $50,000 in debt owed to the ATO? Have any of your clients received a director penalty notice? And do you feel confident in negotiating payment plans with the ATO? Perhaps if you could put into the chat a 1, 2, or a 3 if you've experienced those things.
Andrew, we also have a question from Andrew Ford. He asked how strict the ATO are on late bus for a few days.
Look, if you're a few days late, it's probably not going to be too much of a concern. But you don't want to go beyond 3 months late, because once you're 3 months late, that's when the director penalty and personal liability starts to come into play. Yeah. Has anyone experienced any of these things? Shirley, have we got any comments?
We don't have any response yet. Okay, Andrew said number 3, he had a payment plan with ATO once.
Yep. Okay, very good. Alrighty, a little bit more about AS Advisory. As I said, we specialise in restructuring, forensic accounting and business advisory. We've got offices up the East Coast. We're registered liquidators and forensic accountants and general business advisors. As I said, I've got over 30 years experience, and a number of our staff do as well in dealing in these situations. We're passionate about business. We don't want to wind companies up. We'd rather get involved and help you out of your issues. But the biggest frustration we have is that people tend to stick their head in the sand and don't take action early enough. And the less that sort of narrows your options as time goes on. So there's a couple of QR codes there. If you are having any issues around tax or business generally, you can book a discovery call with us. And there's also a tax ebook available today, which Pearlie will put the link into the chat as well. And there's a QR code there. I'll display these again at the end where you can download that. All right, moving on. One of the most common ATO recovery tools that we're seeing a lot of lately is director penalty notices. And these are issued to companies who have outstanding tax debt. And effectively, if they don't do certain things that are contained in the notice, it can result in the company's debt transferring to the directors personally. They're issued when you have unpaid PAYG, GST or super. And there's 2 types. There's a non-lockdown, which gives you 21 days to act, or there's a lockdown one where you're automatically liable and there's no options available. With regards to superannuation, if you fail to lodge your SGC in time, you're automatically into a lockdown position. What I might do is just show you an example of a DPN. I can find it here. Here we go. So this is a director penalty notice. Hopefully you don't see this, but I'm sure some of your clients may have received these. There's 2 parts to it. The first part is a covering letter, if you like, and it tells you what the debt relates to. So in this case, PAYG obligations. As a B pay, it tells you how to pay the debt, and it tells you what you must do. So it says within 21 days, you need to pay the outstanding debt or cause it to be remitted through one of the processes that it gives you. So then the second part of the DPN is what we call the DPN. It's the notice, and this is the key part. So this sets out the debt. So in this case, there's a number of periods here where the company is behind with their payments for their PAYG. It tells you in column 2 the amount that has been withheld, or the amount that should have been paid, and column 3 is the unpaid amount. And then it says that you've got 21 days to comply with this, either by paying the debt or appointing an administrator, placing the company into a small business restructure or liquidation. And if you don't do one of those things within the 21 days, then the debt automatically transfers to you personally as a director. So it's really important, if you get one of these notices, to seek professional advice as to what to do. Just go back to the...
Sorry, Andrew, we have a question here as well. Andrew Potts say that, can you confirm that you said the ATO can transfer debt from a company to a person? Is that only to the directors?
Yes, only to the directors and only if they've issued a director penalty notice. And they can issue a director penalty notice at any time, but usually it's if you've had debt outstanding for a few months or more. The next one is this is an example of a superannuation DPN. So you'll see there's 2 extra columns here. The 2 extra columns, column 4 relates to amounts that are outstanding where you've actually lodged the superannuation returns within the relevant time frame. So once again, in relation to those, you have 21 days to pay the debt or place the company into some form of insolvency to avoid that debt transferring personally. And in this case, it's got a column 5, which is what we call locked debt. So this is where the company has failed to lodge the returns within the due date or within 3 months of the due date. And these amounts in this column are now locked. So you're automatically personally liable for those amounts in that column. And even if you were to place the company in liquidation, that doesn't avoid that liability. So the only way out of those, once you get a locked one, is to pay it. All right. DPNs are likely where you haven't engaged with the ATO. So if the ATO has been chasing you for debt and you've just stuck your head in the sand and haven't dealt with it, where you have an active, if you don't have an active payment arrangement, or where you have an active payment arrangement but you fail to meet one of the payments, you have tax debt over $100,000, or you have outstanding superannuation guarantee amounts. So if you get one of those, and you can't pay the debt, then you're really forced down a restructuring option path. That's why it's important to seek professional advice from someone like us as insolvency practitioners. So your restructuring options available are a small business restructure, where you can propose a restructure plan to creditors, a voluntary administration, where you can restructure the debt through a deed of company arrangement, or if the company is not viable and you wish to end the business, you can do liquidation. And through each of these, except for the 2 restructuring options, the first 2, small business restructuring, voluntary administration, there's an opportunity there to compromise some of the debt, which, as you see in the last red box there, the ATO generally won't compromise debt on an informal basis. So a lot of people try to negotiate with the ATO, and the ATO will negotiate to a certain extent, particularly around payment arrangements, potentially around remittance of interest and penalties, but they can't compromise core debt. It's actually in there. It's actually not legal. They don't have that capacity to do that. So the only way they can do that is under an insolvency regime. So the small business restructure was brought in post-COVID as an option to try and stop the wave of insolvencies that they thought may have happened post-COVID. It's a debtor in possession model, so it's based on the US Chapter 11 situation where the directors stay in control of the company, and you appoint someone like myself to look at preparing what's called a restructuring plan. There's certain eligibility criteria, such as your debts have to be under $1 million. You have to have your employee entitlements and statutory lodgements up to date. And essentially has 2 phases, a restructuring phase and a plan phase. So under the restructuring phase, someone like myself would work with you to work out what's the financial position of the company, why it's in this situation, how it's going to turn things around, what's its plan to do that. And then we put a detailed report to creditors, and creditors vote on that plan. If the creditors accept the plan, then you move into phase 2, which is your restructuring plan phase. And that's where someone like myself would just administer the plan. So the plan normally might be, we're going to pay 10 payments of $100,000 over 18 months, or something like that. It'll be a set amount of money to be paid over a set period, which results in a cents in the dollar return to creditors. This process has been very successful. It was a bit slow to take off, as you can see in those graphs, but in the last 2 years, there's been a real explosion of small business restructuring. Around 20% of all restructuring has been small business restructuring in recent times. The ATO has been relatively supportive of businesses going through this process, although in line with their firmer action, this position is tightening a bit recently. Initially, when these came in, you probably get a plan away in the sort of 10 to 20 cent mark. We're now seeing plans, needing to be in the 20 to 30 cent range. And if there's any issues, such as poor compliance or direct director loan accounts, where directors have been pulling money out of the company at the same time they haven't been paying the ATO, the return needs to be a lot higher to compensate the ATO for that position. So the ATO traditionally has been supporting around about 80–90% of these, and that's in recent times dropped to about sort of 60–70%. So the ATO is scrutinising these restructures a bit more closely in line with their firmer action at the moment as well. The other alternative is the voluntary administration, which has been around for a long time, where a company appoints an administrator. The administrator takes control of the business, so that's different to a small business restructure where the directors remain in control. And the administrators, if it's a viable business, would normally trade the business with a view to restructuring it through a deed of company arrangement. And once again, creditors, the administrator would submit a detailed report to creditors, putting a proposal forward, and creditors vote on that proposal. And creditors under administration, there's three outcomes. Company can go back to the directors if it's solvent, enter a deed of company arrangement, which is similar to a small business restructuring plan. It's a plan to do something with your creditors, or the company can go into liquidation. So the ATO is no longer a bank. In the old days of skipping BAS and super lodgements, thinking it'll be okay, or relying on the outdated assumption that the ATO will always cut a deal, or avoiding advice are over. You really need to take action on your tax debt. You need to communicate with the ATO earlier. You need to seek professional advice, and you need to deal with it, or you're going to find yourself in strife with the ATO. So the accountant's playbook is lodge on time. That's really crucial, because if you lodge on time, then you're not going to get a locked DPN. So you're always going to have a window, if you get a DPN, of 21 days to do something. But if you don't lodge on time and you lodge over 3 months late, you're out of luck. It's automatically crystallised to the director personally. You need to engage early with the ATO. You need to ensure that your ASIC and ATO contact details are up to date so that you can make sure you're across any communications that you might be getting. And silence is not a good thing from the ATO. It probably means their automation process has already started and recovery is underway. You need to get on if you do have debt and deal with it through a repayment arrangement, or consider restructuring the company through a small business restructure or voluntary administration. And it's important as advisors to document your advice, obviously, and refer your clients to experts such as ourselves if the insolvency situation is required. So that brings us sort of to the end of what I wanted to talk about today. So I'll just see if there's any questions.
Andrew, I've just got a question.
Sure.
Just following up on that thing I put into the chat about how the ATO can put a debt from a company to an individual.
Mm-hmm.
Surely that negates the process of having a Pty Ltd company to protect your personal assets from your company assets.
Yeah.
I mean, how does the ATO get around that? I mean, that just seems unreasonable.
Yeah, unfortunately, that's what the legislation allows them to do. And that's one of the things we're seeing in the marketplace, whether it's local council or local government, state government, federal government. Well, a lot of these agencies are now implementing things that kind of remove or get around the corporate veil. And the biggest example of that is director penalty notices. So if you get one of those director penalty notices and you fail to act, the debt transfers to you personally, unfortunately.
And so how does that impact things like family trusts or spouses who may be related or unrelated to the company? Because that can be quite complicated in terms of okay, so let's say there's a business owner and they have their wife on the books, but the wife doesn't necessarily really work in the business. They might be a director. How does all that kind of work?
Yeah, so you as a director are liable for the period of time that you were a director when the debt was incurred. So this is another thing that sometimes people who want to buy a business and they buy the company and become directors and shareholders of the company. Sometimes you need to, or you could be a silent director, is what you're saying. You need to be aware of what the skeletons are in the company, because if there was debt incurred at the time and you're a silent director, then you're at risk.
Okay. So for instance, just my personal example is I've got a silent director who's been a director of my business for like 12 years. So therefore he would be at risk from any trading deficits that we have in the business.
Correct. Yeah.
His personal assets, and not shareholders though, just directors.
Just directors. Yeah.
Yeah. So don't just come and be a random director of a company.
No, that's right. Correct.
I thought the corporate policy would protect, but no other debtors has that ability except for the ATO, right?
Correct. Yeah.
Okay. And if you have your assets in a trust, will the ATO go after your trust as well?
Well, they'll go after you personally.
Yeah.
So normally what we see is people who have a director penalty notice and they failed to deal with it, and the liability is transferred to them. We'll see the ATO take actions such as getting a credit agency involved to chase the debt, garnishing your bank account, or if in extreme circumstances, getting judgment against you and proceeding to bankrupt you.
That's nice. Nice to be in a supportive environment to run a business.
So this is why it's really, really important to engage.
Yeah. So sorry to dominate. It raised a lot of questions as a business owner who has, multiple businesses and so forth. And so if they go after your bank account, that's the company bank account or the personal bank account?
Personal bank account. If you've already got a DPN that's transferred the debt to you.
Wow.
If you haven't got a DPN, then the ATO can, but you've got outstanding tax debt, the ATO can garnish your company bank account.
Yeah. Wow. Okay. Whew. Okay. That's a lot of powers they seem to have over these things. So, what do you reckon?
Power, and they're using it at the moment.
Yes. So this has always been the case, but they haven't used it in the past. Is that kind of the okay?
Yeah. If you go back to sort of 2017, I suppose, 18, those sort of periods, the ATO was using these mechanisms, but the debt was a lot smaller and the number of businesses affected was a lot smaller. And then we roll through the COVID years where the debt has ratcheted up and a lot of businesses have used the ATO as a bank. And we're now at a position where the ATO's had enough of that and, is cracking the whip and saying that now it's time to pay your debt. You owe the money and cough up, or we're going to use our measures to recover the debt.
Is there any, I don't know if this is an appropriate forum, is there any measures to protect yourself as a business owner from that, such as put your money into your property loan account, so therefore, I presume they can't take your house off you, or,
Yeah, obviously there's personal structuring measures you can do. Best to talk to your accountants and financial planners around that, but obviously a lot of people who are directors hold minimal assets in their own names.
Yeah. Okay. Very interesting. It's some scary numbers in there. Thanks for sharing.
It's all right. Any other questions? Ellie, anything in the chat?
No, we don't have any question in the chat now.
Okay. All right. Well, I'll just put those QR codes up there again. If anyone has any further questions, don't hesitate to reach out to us. If you wish to book a discovery call to talk about your personal situation, please do so. QR code's there. Happy to meet with you on a no cost, no obligation basis to understand you or your client's situation. And there's a QR code there to download our sort of tax ebook that covers off on some of those matters we've briefly outlined today. I think Shirley's putting a link in the chat for that as well, and we'll probably send that around after the presentation as well. So if there's no more questions, thank you for everyone's time today. I hope you got something out of it, and no questions are dumb questions. So if you have any questions that come in mind in the next few days, please don't hesitate to reach out.